Oliver, the European Central Bank today has set out its ground rules under which it tends to oversee the larger banks in the Eurozone in the coming years. Now, there's been an awful lot of analysis of bank capital ratios and stress tests, and what is different about this?
So this is the ECB's exercise in trying to figure out exactly what's what. About a year from now, the ECB, under the banking union proposals, will become the regulator for the Eurozone's biggest banks, the top 130 or so banks. And so before doing that, it's going to have a thorough look at exactly what it is it's taking over, what it is it'll be regulating. And it's kind of there's three parts to it, but the two most significant are the asset quality review and the stress test. So the asset quality review, which is what the ECB is doing, is just a look inside banks' balance sheets to find out exactly what's there and what sort of exposures it has. There'll also be a stress test conducted by a different regulator, the EBA, which will say, well, how will this bank perform under stressed conditions? They'll put all that together and they'll come out with an assessment of whether the bank has enough capital or not, and if it doesn't have enough capital, it will be asked to raise some more.
In the past, the problem with stress tests and the like done at a sort of European level was that the information fed to the regulators came from the banks and from their national supervisory authorities, and it wasn't always good information. How is the ECB going to get around this?
Well, it'll be a difficult task for the ECB partly because they are relying on the banks again to feed them the information, partly because they are doing this in conjunction with national regulators who, as you say, may have a certain angle that they want to pursue or they want to push upon the ECB. Complicating things is the ECB so far isn't terribly well staffed. It's recruiting a lot of people, but it's not there yet. It will be assisted by Oliver Wyman, the consultancy. But still, the ECB needs an awful lot of staff to get this exercise done. And in the end of it, they're coming up against very big, powerful, very well-staffed, very wealthy banks who'll put an awful lot of resource into meeting the regulators on these issues. So it's really got a mountain to climb, as it were.
And what happens if the ECB is unhappy at the end of the day?
Well, if the ECB is unhappy, it can force the banks to raise capital. In the first instance, that will come from private from the private market. So there could be rights issues, and indeed investors are expecting some rights issues to come out of that. The big question, though, is what happens if private investors won't stump up the cash? Will it be bondholders bail in? Will governments have to contribute? That's all still up in the air.
That certainly is a big question. It'll be interesting to see what happens. Thanks, Oliver.